All right, guys. So I'm back. I wanted to come and go over the intraday charts. So we went through all 28 pairs on the last video. I kind of pointed out some MACD divergence instances and how I kind of look at that, right? On this lesson, I'm going to kind of talk a little bit more about indicators, and also we're going to go ahead and drill down into intraday charts. So, as I stated earlier, you might have noticed I don't just use the daily and the 1 hour chart, right? So I use the daily, I use the weekly, and the monthly. So I look at all these to kind of get a popular consensus of what direction I think it's going towards long term. And then personally, I use a 4 hour and a 1 hour to understand where the price action might go in the short term. And then I don't know why these two are here, but I usually use a 5 minute chart. I did that fast. So I just, on the keyboard, I push 5 and then it's 5 minutes. This is how I pick my entry if I'm not doing like a pivot entry. That's a whole different ball game. We'll talk about that later. So let's just jump into these white lines that are on the page here, on the chart here. So these are what's called trend lines, and these are drawn in by myself, kind of trying to connect the tops of the price range of different candlesticks here, going all the way down. Now, if you guys have never seen candlesticks, you're confused and all that good stuff, and you're trying to understand what that is, I'm sure you can find one of my other videos. Actually, you know what? As a matter of fact, I'm not going to make a video just talking about candlesticks. That information is already out there on the web. You can find it. I'm going to push and encourage you guys to get information from multiple sources because that's what I've done. I'm just going to give it to you exactly how I've done it. I'm going to promote courses that I actually took that I think were good, and equipment that I actually use, software I actually use. So anyways, so those white lines are what's called trend lines. They kind of connect and show you a trend. Kind of could have guessed that, right? But anyways, this is the most recent trend line, this white line that goes underneath. And you're going to notice how it touches and bounces off, touches and breaks through, but eventually comes back. Looks like this one breaks through. It also kind of coincides with another trend line that was pointing downwards. I really like it whenever they form that X like that. This is the free version of the chart, so I gotta push an X every once in a while. Y'all excuse me for that. Anyways, when it forms an X like that, I feel like if I drew the lines, number one, if the lines are drawn well, it can kind of indicate a big move coming. Now, there's no kind of like 90% accurate with that statement or anything like that. This is what I've come to realize on my own. So this is me and my trading. All these statements I'm making are me and my trading. You can trade like me, or you can go find other people to trade like, or learn from the sources I learned from and see that they, that I trade a lot like them. And you can kind of piece it together as you want to. That's totally fine. I totally get that. Just do whatever you're comfortable with, to be real with you. So anyways, this trend line kind of floats along the bottom of the price action. So we see some bounces like that. And you're going to see it kind of trend upwards. This red line, I told you in previous videos, is a 50 MA. It's important level for price action. So you're going to kind of watch how it reacts there. If it has a strong reaction off of it, I try to take it up. If it had a strong reaction going the other direction on a downward trend, I look for a way to get in there. Okay, I'm talking a lot, so let me flip over the 1 hour chart to help you. So when I'm looking at a 1 hour chart, again, I'm going to go over the ones that we flagged. I'm looking for something that lines up with the pivot line and bounces off of it. So that might be here where I drew this in. So this is a, let me make sure I'm showing you the right one first. I don't know what this indicator is called, long position, short position. So you can literally draw your probabilities and where you think the market's going to go. So something like this, I could say I'm going to take that long and I want to drop right below the first R1 level or whatnot and below S1. So R1 stands for resistance 1, meaning that the price is going to this level is going to resist the upward movement of where it's going or where it's currently traveling. And then the support is the opposite of where it's currently going. Support is supporting. Think of like holding up, right? And then the inverse is true if it's going downwards. If it's a bear market and that's where the predominant trend is, then resistance will be low because it was already going down, so it should go lower, right? And then support will be up here, meaning that it supports a downward move still, depending on the condition of the market or whatever. So anyways, we look at this, you can kind of measure your risk reward. So notice that that's going to be important. 9.4 or 0.94, it's important. So I try to do a 1-to-1 or better. A lot of times I get to 3-to-1, 2-to-1 pretty routinely. Let's look at this. Let's look at this. This is 1.42. This is 1.21. This is a downward move, 1.54. This is a really good example, actually. I really like this. So I'm going to move it over like this so you can't see the rest of the price movement right now. So when I see this, I see price action kind of making a top. We see kind of like a head and shoulders, like a loose head and shoulders pattern, which means this is the head where it's higher, and this is a shoulder. Like there's a man standing right here looking at you. The shoulder here, head here, second shoulder here. It's a common pattern for a movement downwards, and then they have inverse head and shoulder, which means it would go up. But anyways, you're looking for it to drop down, to break down here. And right here it did. So the shoulder formed and went sideways for a little bit, and then it dropped hard. And when it dropped hard like that, it fell below where the pivot line was for the next day. Obviously the 50 EMA is above that. This pink line is the 200 EMA, which is also an important level that I like to look at. So we see it go down and then kind of pull back. So just like a runner that's breathing, whenever the market's moving in a certain direction, it has to inhale. And when it inhales, that's what a pullback is kind of like for it to keep going downwards. You got to breathe, right? So I think of it that way. That was an analogy that was presented to me a long time ago. So just wanted to pass that on. And so it looks like it pulled back, touched this level, this blue line, which is where I like to trade from. So I'll put this right on there. So the entry is indicated by where the red and the green come together. So this area right here, where you're going to see this line highlighted. Oops, sorry about that. Let me see if I can get it. Oh, there it goes. So this line I just drew, that's where it does. So pull back, I enter here, and I let it go here. And this is a 1.54. So, and on top of that, this is what I like to call inherently better than 1-to-1 when you get in it. So what that means is the movement has already started downwards. So the averages that are made on the next day. So this movement, if I can block this off right here, you guys want to look here. And so each day is represented by the group of lines that it's with, right? So there's green, blue, green. This set is the first day, and then there's another day right here, and then it stops, and there's another day right here. And within this group right here, this day, there was a huge move. So the next day, there's going to be averages. These green lines represent averages. The blue line represents the middle point. When you see a big move like that, what do you think is going to happen to the averages on the next day? The next day are going to be slanted a little bit further down than anything. So when I look at that, I say, okay, should be inherently better than 1-to-1. Let's see if I'm right. I might not be. So there's 1.3. If I come up here, I'm barely right on this one. So I just measured this out to get the risk reward as 1.09, meaning that from the middle point, this blue line, to the green point, to this green point, I've got a 1.09 risk reward. Usually it's going to be a 1-to-1, assuming that everything's equal and the market's equal, but it's 1.09 to the downside. That lets me know that it's inherently better than 1-to-1. I'm going to have a better example of that coming up, but the reason I point that out is it makes me feel way more comfortable and confident in taking a short position. This is a late entry, so late in the day, we have this right here. So I might draw this in pretty early in the day, and then it comes back and hits it. I like setting traps. This is my style of trading. On this one, I actually had the stop loss coincide with the next day's average. So once the next day printed or whatever, or we got into the first hours of the next day, I made a stop loss above the next day. And what that means is usually I have a stop loss above the same day that the entry was taken. But I moved it here because I felt very confident in this setup. When you see a lot of confluence, when you feel like it's all pointing in the right direction, you do that. So, not to make these videos too long, I'm going to go ahead and jump over to USD CHF on the next video. But this is USD JPY, and I'm looking at a good example of the 50 MA line up, the pivot point lining up, the 200 EMA being a little bit, that's kind of sandwiched in there too, and feeling like this is a good area along with neckline-ish levels for the head and shoulder pattern. And I'm looking for something that's going to allow me to catch this and drop it in. This probably is going to be a trade you could watch and look at the previous areas of the market to look for a landing point. So if I drew a pyramid here, this is around the time that all this started. So maybe I could have actually went down to around here. And that was me looking to the left this entire time. I know you can't tell that, but I would have been pretty close here. So I might have been able to get out right there, maybe a little bit above. But anyways, you notice the risk reward is 5.24. So 5%, 5.24% on one trade. And that's kind of the powerful way that I'm going to kind of show you how I catch those setups. All right.